Hello everybody, welcome back. That's right, I got my webcam on. There's reasons to celebrate. Bitcoin absolutely powerhousing through to the 200 exponential, reaching a peak so far of 21,300. Who would have thought it? Me personally, my target was 19,200. That was my target. The target based upon this trend line over here, which we can see a bit clearer over here on the daily, on the weekly. It's also the 21 exponential moving average, and we've smashed right through that. These are all things we were talking about on the Patreon a week ago, and how 10 exponentials break on weeklies, they lead into and up to the 21 exponential, which again, you know, is just above this trend line, this descending triangle formation, and we've smashed right through it. So this has caused a move, and look at the volume on this. You know, 9.3 billion in a 24-hour trading volume on Binance alone, right? So there is some serious cash floating into Bitcoin and crypto as well. If you look at this, everything behind me, my lovely little thing that you can buy if you want to, there's links in the description below. Everything's green, everything's going green, and this feels very much like the beginnings of the last bull market, right? I'll show you it, and I'll show you. Last bull market did have a period of a bit more clearer accumulation above that 10 exponential. Big move up, retrace, reclaim, 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 reclaim. Powerhouse move, basically more or less confirming a new bull market. And that was April 1st. 2019, all those years ago, but I remember it like it was yesterday, and to be honest with you, it feels today like it was yesterday. Do you know why? Because it was yesterday that it happened, that's why. So what's going on from here is the main question. Is it going to continue, or or do we have a bit of consolidation? My best guess at this point now, as we've already surpassed all the targets that we had from last week, is that we do consolidate from here. However, as I was saying last night on the Patreon live stream, which you might want to join, there's links in the description below for that. It's only £7.50 a month. You get 2 live streams a week. Ask me whatever you want. As I was saying yesterday, said, you know, when you're looking for new entries in something, unless of course you've got, you know, a very long-term time frame, and you know, the daily TA effectively means very little. There's one thing to take note of here, which I made a tweet about last night as it was happening, is that basically the money flow index, not that it's the be all and end all of anything, the money flow index at this current moment in time is higher than Bitcoin was at its all-time high. And the money flow index is a representation of volume and price. And effectively, it's a way to gauge the amount of money that's come into an asset from what it was previously. So it's about volume, really. And as we can see, you know, we monitor volume, or I like to monitor volume regularly, and we can see that 9.3 billion is quite a lot of money that's come in. And so that's caused this money flow index on this daily to spike higher than it was at its all-time high. Absolutely ridiculous stuff, to be honest with you. But again, it doesn't mark the absolute top. I always refer, or have begun to refer to these sort of ridiculous moves as things caused by Captain Noob Master, who's FOMOing. And FOMO basically doesn't represent, you know, TA. TA breaks in FOMO, just as TA breaks in sharp sell-offs like black swans. So what we're seeing now, based on the TA, is a rejection on a 200 exponential moving average on a daily with a money flow index of 95, which I have a rule of thumb. I wouldn't ever buy anything with a money flow index of 95. This is only on a daily, though, I have to say. A weekly's still got plenty of room to move, and it's still surfing this trend line that we've had in here for a little while. And I would say that there is a chance that Captain Noobmaster could bring this up to the 200 exponential or the 200 simple on the weekly, which means that, you know, 23 to 24,000 is still on the cards over this weekend. I know it sounds ridiculous, but it is. But I'm not suggesting that that's what it's going to do, because the daily is pretty hot. Definitely pretty hot. We'll take it to a 4-hourly just for fun, and we don't see any bearish diversions at all on this. And obviously, you're going to get it on the money flow index, so there is some tailing off of volume on the way up. But again, Captain Noobmaster can keep this running, because he's going to wake up this morning, he's going to be too afraid to miss out. It's been a very, very significant bear market for most, unlike us, who have managed to do 2 really big swings on this. And actually, as you can see just on my bot platform, quadruple my balance and that's just from the bot platform that I've got. I'm not going to say that I'm awesome, but I've traded the bear market effectively and more or less caught this move. Although I have to say now I've sold out of the trades, and obviously I've only got the hodl bags left at the moment. Speaking of hodl bags, though, we do want to think about what we're going to do from here, because this is very much like the last bull market, yet it is not to be. It's not to be too excited about. Let's not get too excited. Now I'm going to show you why. So obviously everything's looking really good. We've surpassed all these areas, and long story short, now that we've broken all these areas have become major supports. And so if my TA were to have played out, perfectly, as of last Friday when I was talking about this, moving up to 19,200, I would have expected a rejection from there and a pullback to its previous area of support stroke resistance, which is in the $18,000 zone, so 18,000 to 18,500, and a resistance of 19,200. But as we've smashed right through all of these, it means that we've cleared areas now that were resistance and that are now support, and that means that we do have areas that we can realistically hold on to as supports. First one being 19,200, which would be the weekly 21 exponential moving average. We've also got 19,500, which is your daily 200 simple moving average. You've also got the 18,500, which is this box of significance backed up by a 10 exponential on the daily. And also, I believe, let's just take it back to a weekly, we have the 10 exponential on the weekly sitting around 18,000. So it seems at this point now, with this price action that's taken place so dramatically, that it seems unlikely that we do pull back below 18,000 anytime soon. But 18,000 is definitely an area that can get hit again, which means a pullback of around 14%, possibly, potentially. It doesn't have to happen, because Captain Noobmaster has just borrowed money off his mum and his gran, and he's pumping these charts. That's what he's doing. He's pumping these charts. He's saying, I don't care about your money flow index, man. It means nothing to me. And he might be right. In a trending move, it doesn't mean anything. It is just an indicator of risk. That's all it is. It's showing that if you want to sell, you sell it to Captain Noobmaster right now, because he is throwing his money into this asset. You want to get some money, you want to take some profit, Captain Noobmaster will buy it off you. So that's what's going on right now. And again, Captain Noobmaster might have deep pockets, and this could keep pumping and pumping and pumping and pumping. This is why I talk about the buy, hold, stake scenario over a long period of time. And I talk about trading. Two completely separate things. And then bots on top of that. All completely separate strategies that can run parallel to each other. But long story short, I think a pullback is required, although it might not happen at this level. We might overshoot the mark. Now, moving into next week, this is what I was sort of hinting on in the early hours of the morning, this morning on the Telegram, when I should have been sleeping, obviously. The traditional market setups at the moment are one of a bit dodginess, okay? So I say dodginess. So we've got the S&P at a major area of resistance. And as we've seen with Bitcoin, resistances break, resistances break. I targeted 19,200. We're now above, we were not that long ago above 21,000 in the blink of an eye. So they can break. But at the moment, the S&P hasn't broken. If it were to break here, it would be quite bullish, because as far as a formation like this, a descending triangle like this is concerned, breaking before 70% of the apex is a bullish sign, and probably going to lead to continuation, or at least another aggressive move. And again, before we even talk about that, I've been speaking since this low here that I believe that this is going to be the low for the S&P, leading into a period of either accumulation or bull market, one of the two, but unlikely to form a new low. Again, I've been saying it for months since the low came in. We called it the Everything Bounce 2.0, didn't we? And that was your Everything Bounce original one. We did that, loved it. This is the Everything Bounce 2.0, did that, loved it. Now what we're looking for is basically maybe something along these lines, where we actually go into we'll call it a bull market, or should we just call it the end of a bear market? I know those two things sound like the same thing, but they're not. An end of a bear market is different to the beginning of a bull market, generally speaking, because it could mean a long period of accumulation. Not looking for new highs or anything like that on the S&P. we're looking for no more lows, or not for a long time at least anyway. So don't mix the two together. But for the moment, we are still at this area, and while being below an area of resistance, we should expect it to be resistance. So I'm not going to say to you that we're definitely going to break or get rejected, but it's such a very clean chart for these resistances here. I would expect, to be honest, a rejection to begin with. I'm not saying we come down to that low, so don't mistake my green lines for, you know, the dogmatic future. Also, we've got our euro, which again, I've been talking about this since Christmas. I do believe that we should be looking for a retest of this golden cross at some point soon. It's down here at the moment. Currently, the 200 exponential is currently at 104.5 on the dollar there. So that would be about a 3.5% move, I believe, at this current price action. Yeah, 3.5% move, which again, you know, the correlation isn't perfect, but there is a correlation between markets and dollar price. And if we do pull back by 3.5%, that's where we're going, and it'd just be a bullish retest, provided we bounce from there. Again, there'll be downside for the markets, generally speaking. And the reason I talk about all of this is because it correlates to the way that the Dixie moves. And I think that the Dixie is about to have a bounce from around about these levels, 101.5-ish area, which basically marks this significant bounce. And it would also be a reasonable area on this chart for having some kind of relief rally. Just like we spoke about the other day with Bitcoin having its weekly death cross, or with an incoming weekly death cross, and whether or not you think that's going to have continuation down or not, a retest of that to see if it's bullish or bearish, should I say confirmation of it being bearish, is still quite likely. Even in the worst case scenario, to have a retest of a bearish death cross is quite likely. So that points to 23 to 24,000 for Bitcoin anyway. Same sort of thing would take place for the Dixie. We'd be looking for a retest of this incoming death cross on the exponentials, or the confirmed death cross on the simple moving averages. Let's face it, I told you guys that this was the top on the Dixie. This is where we enjoyed the last big major move, wasn't it? We enjoyed that. We did that because I told you that's where it was. The major swings are where I get my, that's where I fill my pockets. And hopefully, you know, I've still got the knack for these major big swings as well. And so, just as I've been saying for a little while now, sounds like a broken record, there is likely to be a big swing on this Dixie, causing an inverse effect on markets like, obviously, indices, probably commodities too, and I'd say almost certainly crypto, especially after the money flow index read is 95. Same thing for Ethereum, absolutely maxed out on this. Where are we right now on this? It's a 98, I believe. Yeah, 98. And if we just check the chart historically for Ethereum, back just on the Binance chart alone, this is the highest read we've ever had on the Binance chart. So over a four and a bit year period. So we should respect the fact that this is not a problem, but very likely to be a peak that gets either dumped or consolidated from. But the good news is that we've got so much support below us from all kinds of different areas on both Ethereum and Bitcoin, and probably majority of crypto, that we shouldn't worry too much. And we should be patient with buying these dips. We shouldn't go too crazy on them, because traditional markets, if they do reject from here, then yeah, I mean, we're probably looking for a week or two's worth of sideways and down, or maybe even dump. We're not entirely sure yet because we haven't quite seen it. But when we do see it, we can then start to guess where the next major low would be, or the next major area for bounce would be, by the dip, basically, by the dip, BTFD. the Bitcoin dominance chart pulling back now, since altcoins seem to be catching up, as you can see. My lovely little thing in the corner there, having a great old time. But with the Bitcoin dominance sort of breaking from this specific area now, it's not in an area where I would call any kind of alt season. The alts are going to move with Bitcoin. The market should move as one, which is good and bad. But if we're looking to get any sort of entries on altcoins for, I suppose, what you'd consider to be an alt season, we'll be looking for much higher areas, like the alt season that we got over here in the bear market. Who told you that? I told you that. When did I tell you that? The day before it happened. And Captain Noob Master was telling me, look, you're wrong. So listen, Noob Master, I might be wrong, but I'm willing to take the plunge. Kapow! All the way down to 40% dominance. Cash in my pockets, living the dream right again. Anyway, for the moment, and we don't have a setup like that. You know, we played this small rotation here, if you want to call it that, this small pullback on the Bitcoin dominance chart, and we did okay with it over the last week. We've done pretty well over that, you know, and it took a bit of time. We did that, but now we're neither here or there, so the focus really is on Bitcoin, and I'd probably say the focus should also be on Ethereum, because Ethereum is going to be an indicator for all altcoins' health. And at the moment, 98% on the money flow index. You would probably want to wear some some very strong underpants, to be honest with you, if you're looking to enter into Ethereum at this point now. And if you're entering into Ethereum at this point, just as with any altcoin, the risk to reward in the short term is extremely high, you know, high risk. So long story short, this is probably going to be a choppy, and maybe even this is where we peak on this weekend now. And if we close below 18,000, which again, right this very moment in time seems unlikely, if we close at or below 18,000 by tomorrow, it's probably going to be seen, and again, you might not recognize this theory, but it's probably going to be seen by traditional markets as an indicator of risk, just like it had been on the way down. We've had weekends where Bitcoin dumped and crypto dumped 10 or more % over the weekend. Traditional markets opened up in their pre-markets dumping as well, because they see it as risk appetite falling off over the weekend when traditional markets are closed, and then they go, right, that's it, you've seen what Bitcoin did over the weekend, I don't want any part of this, I'm going to sit this out as a sell, and the markets sell. Now again, if we close at this level, or even above 20,000, I would say, traditional markets might look at that as an indicator of risk to reward and say it's actually quite positive, and that might lead to a breakout for the S&P, which is going to have a snowballing effect on crypto as well. So self-fulfilling prophecy, continuation. So it's all about the weekly close on Sunday tomorrow, and then Monday's open. But so far, like I say, I'm very pleased with everything, the way it's all gone. It's been an amazing week's worth of price action. Again, it was only last Friday on the Patreon I was saying I'm surprised that the sentiment and the interest in looking at these charts is so low today, because this is, if anything, the time to be scouting for all these trades. And yeah, 30-50% up now just over a week. You know, that's pretty sweet, and that's just spot trading for you. Things are looking interesting, and like I say, bull markets do begin like this, but they don't necessarily go straight up to all-time highs. They do fizzle out, and the reason for this mostly is because the volume has been so low that the charts get so overheated, and they pop, just like they popped in 2019 when it rallied from 3,000 to basically 14,000 over a few months. So we could be looking for something like that to happen. But this time round, traditional markets are playing an important role as well. So we can't just look at the Bitcoin chart and go overlay this fractal to this. You can do that and it might work, but we know that there's a bigger thing at play. And I strongly recommend us take seriously the Euro, the S&P, the Dixie, and we take on board what it is that they're telling us, which is that you know, a bit of a reversal to take place in the direction of these charts, which should probably impact crypto. And if it does impact crypto, because crypto is so high at the moment and gone so high so fast and the liquidity is so tasty, it might have a bit more of a pullback. And again, so long as we're above 18,000, I would say at this point now, we might not see lower than 18,000 again. It is very, very encouraging, I have to say. Anyway, I'm going to leave with you there. I'm going to go turn the lights on and make myself presentable and leave the house, maybe even if I can. Make sure the Wi-Fi connections is acceptable wherever it is that I'm going, because I'm pretty sure I'm going to be glued to my phone. But other than that, I hope you have a nice day. Please leave comments in the description below. If there's altcoins you want me to look at, let me know. I'll have a look at them. If there's anything you want me to answer, you know, just leave them in the comments, because the algorithm likes it, really. That's why people tell you to do that sort of thing. What's your opinion on this? Leave a description. Leave a comment, please. Leave a comment. I want to hear I want to get your algorithm. I want to boost my algorithm. But if you do want to leave a comment, do it anyway. But if you want to boost my algorithm, just say something. And like and subscribe if you're not already, because like I say, I have called a lot of this throughout the bear market too. I might not be the most popular YouTuber out there, but I tell the truth, and oftentimes the truth is probably the best thing you can. It's probably the best thing you can have in trading. You don't want to be fed lies when trying to trade, because you'll end up trading lies and destroying yourself. Anyway, things are looking very encouraging. I hope you have a nice weekend. Take it easy.